Ladies and gentlemen, I want to welcome you to It's Rainmaking Time. At a time when the G20 have announced and decreed the call for the end of the dollar and a new super currency, an international super currency, as special drawing rights are becoming more formally used as a form of a basket of currencies. Now is the time to understand clearly what's at work. And not only is it the time to understand what's at work, ladies and gentlemen, it's the time to understand why metals are so important. Gold, silver, platinum. And I've met a lot of people in the metals industry and in the finance industry, but I must tell you, our guest today I call the Yoda of the metals industry because he's so wise and his knowledge is so far-reaching. I've never heard the synthesis of explanation and understanding the way I have with James Turk. James Turk is the founder and chairman of GoldMoney, a riveting, convenient, and economical way to buy and sell gold, silver, platinum online using digital gold currency. He was awarded 4 U.S. patents, specializing most of his life in international banking, finance, and investments, as he graduated from George Washington University with a BA degree in international economics. He began his business career with Chase Manhattan Bank, now J.P. Morgan Chase, which included assignments in Thailand, the Philippines, and Hong Kong. In 1980, he joined the private investment and trading company of a prominent precious metals trader. He moved to the United Arab Emirates in December of 1983 to be appointed manager of the commodity department of the Abu Dhabi Investment Authority. This position he held until resigning in 1987 to begin the free GoldMoney report. He's written several monographs on money and banking. He is the co-author of The Coming Collapse of the Dollar, now available in a paperback version, entitled The Collapse of the Dollar. Please welcome the Yoda of metals, James Turk.
Hi, Kim. Thank you for that introduction.
It's true. You are the Yoda of the metals industry, and I've never heard anybody put it together the way you have.
Thank you very much.
Let's go right into your book, The Collapse of the Dollar, and How to Profit from It. You say in this book that gold is not a commodity like eggs. For the general populace who does not have historical background into gold and silver, you say, and it has been said that gold is money. It's sound money. What does that mean?
Yeah, gold is different from everything else we humans produce. Everything we produce is consumed and disappears. But gold is different. It's accumulated. It's hoarded. And in order to understand this, all of the gold mined throughout history still exists today in this above-ground stock, which comprises approximately 160,000 metric tons, which, to look at it visually, is approximately the bottom one-fifth of the Washington Monument. And to put that into perspective, there's 20 times more steel poured every day than there has been gold mined throughout history. But the question is, why does gold have this value? It has value because its usefulness is a monetary unit of account. Gold preserves purchasing power over long periods of time. So it's different from other commodities. These other commodities, soybeans, crude oil, they disappear. Even copper disappears in the sense that it's dispersed through millions of applications, and you'll throw away a spare piece of copper wire, but if you have a piece of broken gold jewelry, you don't throw that away. You put it in the drawer until eventually you have it fixed or replaced or repaired.
You say, and it is said through 5,000 years of history, that fiat currencies always fail. If that's so for the general listening audience, why is that so, and then why are we using it? Why are we using paper currencies?
Well, first of all, when you have paper currency was invented as a convenience. If you look at the history of money and currency, and I like to distinguish between the two because they are different. The history of money and currency are different. Money does the same thing today that it did 5,000 years ago. Money is what I call a mental tool. It's something that we use for interacting with each other when we go into the marketplace to fulfill our needs and wants. And currency is what we actually use day to day, hand to hand, when we go into the marketplace. And there are basically two types of currency. There's paper currency, the cash in our pocket, and then there's deposit currency, which is the money that moves around within the banking system. these two forms of currency are really a matter of convenience because it's too difficult to move gold coins around, and the logic had been that gold is too valuable to move around because it wears out. So let's leave the gold and silver in the vault and make these paper currencies redeemable into gold and silver that sits safely and secure in the vault. But what we've done is we've moved away from that redeemability, and we now just have pieces of paper out there circulating, backed by nothing. And the reason why paper currency, fiat, by the way, means just currency that's issued by a government and circulates because of government force. It's a Latin word. And this fiat currency circulates because of rules and laws and regulations, by the government. But the reason why it fails is when you eliminate the link to gold, when you eliminate that redeemability back into gold, an infinite amount of paper currency can be created. The only thing that stops a government from issuing an infinite amount of paper currency is discipline. And unfortunately, politicians and governments don't have that self-discipline, and inevitably they issue more and more currency until eventually they reach that breaking point where confidence in the currency collapses, and the currency then collapses as a result. And my view is that the dollar has been on this road. This is what John Rubino and I laid out in our book, The Collapse of the Dollar. The dollar is on this road to what I call the fiat currency graveyard. There are hundreds of other fiat currencies that are buried there. And unless we get off this road, the dollar will be there too. And I think it's going to get there pretty soon because we're reaching the point now with the U.S. dollar that the lack of discipline on politicians in terms of creating money is becoming increasingly apparent. And the confidence in the dollar is breaking. It's already broken badly internationally, and I think it's starting to break domestically with the rise in the gold price over $1,000 an ounce.
Do you actually think at this time that free markets really exist anymore? I know it's a difficult question, but do you think they really exist anymore at this time, the way things are operating?
Yeah, they do. When two individuals interact with one another, and they do so without the force of government, they are operating in a free market. They don't have to use a national currency to transact. They can use other currencies to transact. But as far as government involvement is concerned, and markets in general, free markets are becoming, let's say, imperiled by government actions. And the thing that I really don't like to see happen, Kim, is that rather than turning to the free market for answers, more and more people are turning increasingly to government for answers. And that's really the wrong way, because goods and services come from the free market. New ideas, new technologies, they come from the free market. They don't come from government. All government basically does is take away from producers and redistribute it according to how it wants to redistribute wealth. But it's the free markets that create real wealth, and it's the free markets that raise mankind's or humankind's standards of living. So we should be looking to the free market for answers rather than government. And unfortunately, for now, we continue to look toward government, and that's really the wrong way.
Most of the money that's being printed is referred to as M3. Could you explain what M3 is, and then explain why it is that the amount of money being printed as M3 does not equate in equal and balance to the goods and services that are being made available, and why that's a problem?
Yeah, okay. First of all, M3 is just a definition of the quantity of money. You have M1, M2, M3, M3 being the broadest, and it basically includes all dollars in circulation. And by dollars in circulation, I mentioned earlier the two different types of dollars. The paper currency, the green notes that we carry around in our pocket.